Well, today we saw the RBA cut interest rates yet again, and yet again another Australian market all-time high. So hi there everyone, welcome to the Traders Circle weekly market update. Today is Tuesday the 12th of August 2025, and before I start, you do need to be aware that whatever I say is general advice only. As I mentioned, we saw an RBA interest rate cut today. The RBA cut interest rates by 0.25%. That comes after their surprising hold at the last meeting where everyone was expecting them to cut. With the rate cut today, the market cheered and we jumped to a fresh all-time high, and the market was pretty quick to start pricing in additional cuts at subsequent RBA meetings as well. But just on that, if you read through the accompanying RBA statement, they didn't really favour cutting further. They basically said they stood well placed to react to developments in the Australian and global economies. They also didn't really, they did touch on the recent weakness in the labour market, but they sort of downplayed it a little bit. They said that the jobs market remains strong. Unemployment is 4.3%, up only slightly from its low at 4.1%. I think they're being deliberately a little bit disingenuous there because 4.3% unemployment at the moment is not 4.3% unemployment 20 years ago. Changes in the way things are measured and sort of, a bit of a fudging of the numbers means that unemployment does remain very, very low at the moment, but it doesn't necessarily mean the labour market is strong. It doesn't necessarily mean that we're seeing, wages growth due to demand for labour. It doesn't necessarily mean that it's easy for people to find jobs out there. So I think being a little bit elusive with how they worded that. Regardless, they didn't have that a strong favour towards continuing to cut. So it was a little bit surprising that our market kept running higher. Given that we knew this rate cut was coming, we'd known since the last meeting that this rate cut was going to occur. All the data that's occurred since then has supported it. And, some people even expected a 0.5% rate cut, which is not what we saw. So the positive response, a little bit surprising. Another reason why the positive response is a bit surprising is that we're in a company earnings reporting season. This will be the third year of declining earnings for the Australian stock market. Yet in that time, Australian share prices are strongly, strongly higher. Absolutely ridiculous that our market is, on a valuations perspective, the most expensive it's ever been, higher than its peak in the dot-com era. Now, some people might point to eras of total financial crash and say that our market was more expensive then, but that's actually just due to more short-term timings around impairments and write-downs. This is by far the most expensive we've ever been. And every major stock, or pretty much every major stock that's reported so far, has fallen after their results. JB Hi-Fi fell 7%-ish after a great report. QBE fell 10% over 2 days after a pretty good looking report. We saw Rio fall after its report. Even today, SGH Limited, who owns Boral and a few others, they fell very strongly after what appears to be a good report. And the reality is that even if you are able to grow earnings, above economic growth, even if you deliver 5-10% earnings growth as some of these companies have, your share price has gone up, 20, 30, 40, 50% over that period. So, the earnings, even when you have a good report, they just can't justify these extreme valuations. So it is surprising that literally every other stock is ignoring what's happening in the reported stocks so far and continuing to rise. Only the reporting stocks falling on their reporting dates. I've never seen a market this divorced from reality, this divorced from what's going on in the real world. This divorce from what's going on in their own businesses. And I don't think it's going to change anytime soon, unfortunately. I think really what we're seeing is the effect of the greatest money printing of all time and expectations that interest rates are going to be cut. And that is working in unison to push prices of every asset higher. Gold's at a record high, property prices are rising, the share market is at record highs. The consequence of that is that everyone's money is being devalued. And, for now, people are happy to say that inflation's continuing to fall, it's continuing to come lower. But we are about to see a US CPI, an inflation report, that's going to come out tonight. It's actually expected to tick up slightly. If inflation starts really rising again in the US, I think we're going to have some problems. All this printed money, all this currency devaluation, record levels of asset prices, are we going to see consumer prices start to rebound strongly as well? If that's the case, there's a chance that eventually this house of cards comes tumbling down. And it is very much a house of cards, and it will come tumbling down at some point. It's just about whether it's 1 year, 2 years, or 5 years. It is quite ridiculous what they've done with the global economy. I don't think there's any real solution to it, other than trying to increase taxes and reduce, government deficits. And there's no political will to do that at the moment. The one thing that could stop them is spiraling inflation, and then if interest rates head back up, that triggering a spiraling effect on government debt, where they have to pay more interest, and that starts to grow the debt more than they can manage. So yeah, like I said, U.S. inflation tonight, it's expected to show inflation ticking back up. Again, that's despite their market pricing in a rate cut for September and pricing in a high likelihood of back-to-back rate cuts at the next 2 Fed meetings. Inflation is expected to tick up. Government spending record levels, only expected to grow further. Ridiculous. But that spending and the expectation of rate cuts, like I said, triggering this incredible rally. So we'll have to see what that event holds for tonight. Could it trigger a bit of a revision? Who knows? But it'll be one to watch. And then tomorrow during Australian time, we're going to see CBA's report, Commonwealth Bank's report, the biggest report of this season, the most expensive bank on earth, the most overpriced bank on earth, and will that trigger a bit of revision for our own market valuations? Again, who knows? We'll have to wait to see. If we have a quick look at the charts for this week, guys, this is the XJO, top 200 stocks on the Australian market, and we can see that it broke through to a fresh all-time high today. Generally, when we do break to a fresh all-time high, we very quickly find a new level. The last breakout, we stalled at 88.50. We held that for a little bit. The break before that, we broke out to 87.80, let's say. We held that for a bit. The break before that, we came up to 86.50 roughly, and we held that for a bit. So either today, or with today's session, or tomorrow's session, I imagine we'll find a new resistance level, and then we'll come back and possibly hold 88.50 as support. If not, we'll come back to 87.80 as the support level. If we have a quick look at the US market, and we can see here the US S&P 500. They've been on a very nice uptrend since the lows of April, but they have stalled out recently at 6,400 index points. They fell off, they found some support, and they've come back up to that resistance there at 6,400. We now need to wait to see if that level is going to hold as resistance, and they're going to fall back off from here, or whether they're going to break through and continue to rally. Like I said, they've got that very important inflation reading tonight. That's probably going to be the deciding factor as to whether they see fresh highs or whether they head back towards 62.20. If they break 62.20, that's where we will likely see a bit of selling, as we'll have seen the double top pattern play out as a reversal pattern at the top of the range. So we'll wrap it up there for this week, guys. Another head-scratching day from our market. It's been a couple of head-scratching years. It looks set to continue by and large, but first it'll have to weather some potential volatility events with the US inflation tonight and the CBA report tomorrow. Hopefully you guys enjoyed the video. If you did, click like, click subscribe, and we'll see you guys next time.